Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up, and I'm so excited to do this one because and I'm excited with the fact that we got him like really quick off of his amazing earnings call. BEEM Global, they had him on not long ago, was it maybe 4 months ago, Desmond, when we had you on and we talked about all these fantastic things that were going to happen in the future.
Yeah, don't ask me. Time flies when you're having fun. It seems like just 10 minutes ago that we last talked, but yeah, I think it was fairly recent. And yeah, I told you a lot of good stuff was going to happen, and I'm quite often pretty aggressive about when I think things are going to happen, but I'm rarely ever wrong about if they're going to happen. And this is certainly the case, proof for that again.
Yeah. So last week it was you put out an earnings, and let me just tell you, I listened to a lot of conference calls. I've been doing this a long time. I've been doing this for over 30 years, and it was probably the best. I mean, I even told you, I think this might have been the best conference call I've ever heard. I mean, ever, of any company ever. Right.
Well, thank you for that. It means a lot coming from you, and I appreciate it. And I'll just tell you this: I have 2 kids, and what I tell them is, if you want to tell a good story, make sure you believe it. That's the key thing. And so I have to hand it to my team. They delivered to me the content to make a good earnings call. And by the way, Tim, I have heard that, and again, I'm not trying to blow my own trumpet, but I'm very happy to blow BEEM's trumpet. I've heard that comment from quite a few people who said it was absolutely the best call they've ever heard. Experienced people, by the way, but I got to hand it to my team because they delivered me the content to do that. Staggering growth, execution, cost controls and everything else. Just what we have always said that we would do and what we've concentrated on. And the market, we were a little ahead of the market from the electrification of transportation I'm talking about, but it's catching up with a vengeance now. And we have the right solution for that.
If you look back, right, at the journey to get here, you still got a lot of work to do. I mean, let's not act like there isn't more. It's not like the story is over. We're just getting started, in my opinion, right? This is when it starts to get fun.
We have not scratched the tip of the tip of the tip of the iceberg. I'll tell you something. We just announced this morning a $29 million order from the U.S. Army, 367 EV ARCs for the U.S. Army. And I don't mind telling you that what I told my ops team is, this is great, but just be aware of the fact that when you deliver these, we should be expecting 4-digit orders from them next, because this, while it seems like a big deal to us, it's nothing in comparison to what their requirements are. The federal, just dealing with the federal fleet alone, 675,000 vehicles in the federal fleet, they are under mandate to have all of them be zero emissions by 2035. But here's the really interesting factor. The light duty fleet, cars, pickup trucks, and everything else like that, which makes up the majority of the vehicle, have to be zero emissions by 2027, 5 years from now. So the federal government, US federal government, which is today the largest consumer of diesel and gasoline in the world by far, is soon to become the largest consumer of electric vehicle charging infrastructure in the world by far, because you can't have the vehicles without the chargers. We have the fastest deployed, most scalable, most robust, lowest total cost of ownership infrastructure solution made in America available today. So it's not surprising we're getting these orders. And, we've been planning for it. I've got lots of capacity in my factory to be able to execute on them. But I don't believe that what we're looking at right now, although it's certainly, it's a big shift for us. But I don't believe that it's anything in comparison to what's coming down the pipe. Nothing.
So let's talk about a couple of things that, I think were brought up and were addressed in the conference call. A lot of the concerns, especially in the EV space, is supply. Right, being able to get batteries and so forth, to be able to supply them, right? And I've heard from other electric motor guys that they're looking at 1.5 to 2 years to get batteries. They got to put up 50% cash, and they got to wait 1.5 to 2 years to get those batteries, right? Yep. That's scary, especially if you start to really scale. I mean, yep. But you want to address that at all as anybody that's got a concern about that?
Yeah, look, I've been making renewably energized products that have onboard energy storage, batteries, for a decade. And I can tell you that towards midway to the third and then into the third quarter of last year, I started to get very, very worried about battery supply, very worried. If I don't have batteries, I don't have a product. And you and I'd be having a very different call right now. The other thing about installing batteries over the last 10 years in my products is that I've had an opportunity to take a look at lots of different solutions and lots of different technologies out there. And what I did in response to that supply chain concern, but for lots of other good reasons as well, which I'll illuminate in a second, is I bought the company from whom I've been buying the batteries. And I want to talk about the deal structure on that in a second because it's important, but I also want to talk about what that means to us. So first thing is buying the company from whom I supply the batteries, from whom I buy the batteries, went a very long way towards defending our supply chain. Beyond that, it put me in direct touch with the Korean supplier of the commodity cells. I've had their CEO in my San Diego factory just a couple of weeks ago. And what's interesting about that is, when I first started talking to people like this, they're like, why would we sell you guys battery cells when everything that we can make, we're selling to electric vehicles? And I said, well, it's very simple. If you don't have charging infrastructure, you won't be selling any electric vehicles. Okay. So make sure that you are making sure that we are successful. Otherwise, you will not have there'll be no program for them to the electric vehicles or no infrastructure for them to charge on like that. They have accepted that argument. And do you want to know how much they've accepted it? They want to promote our products in Asia now. Okay. So that's what's called a buying sign and security for us. So that was a good move to defend our supply chain. Beyond that, batteries are the single largest contributor to my BOM costs. And I'm a BOM-heavy company. Labor is fairly insignificant where the cost of my products are concerned. Most of it comes from bill of materials. Batteries were about 30% of my bill of materials. Obviously, there was margin associated with that I was giving away to another company. So now that I own that company, I get to recapture that margin. So that will be a significant cost reduction for us as well, because we keep the margin in-house. We don't give it to somebody else. It belongs to us. And then we got their IP portfolio. And believe me, the technology is very good. What we do is we take those commodity cells. I'm not interested in owning commodities, the manufacturer of commodities. But we take those commodity cells and we do four things to them. The first thing that we do is we make them last longer. Our technology makes that cell last longer. So the thing you put in your flashlight is a cell, right? That we make those things last longer. We also make them more energy dense. We can put more energy into them and take more energy out of them and faster. And those two things combined is the same as saying cheaper, because essentially when the battery lasts longer and you can put more energy in and out of it, that your cost of stored energy is reduced. And so we essentially make those batteries cheaper. And then there's the one that really gets the headlines. Our technology is able to prevent largely thermal runaway propagation. Now, thermal runaway propagation is the engineer's term for fire or explosion, right? What ends up happening when you see that, and you've all seen, I'm in New York today, and in New York, there's been several stories about these scooters catching on fire and blowing up and all that stuff over here. The reason for that is because all these little cells, Tesla's full of them, electric cars are full of them, your hand tools at home are full of them, these little commodity cells. First of all, you get failures in them. About one in every, even the high quality ones, 1 in every 10 million of them, you're going to get failure. And that can cause them to get very, very hot and to catch on fire. Certainly, if you penetrate them or if you impact them, that will cause them to catch on fire as well. That in itself is okay if it's only one cell. But the problem is when you pack all those cells together, that heat ends up propagating into the cells near it. And then you get this kind of nuclear reaction where it's a propagation, right? And then you end up with a fire or an explosion. Our technology prevents that from happening in almost every case. So we're moving into a world now where we're going to see a lot more devices moving around with these types of battery packs in them. In fact, I was in Munich a month ago, and I was in a hotel, and I ordered my dinner late at night in the hotel, and it was brought to me by a robot. Not a waiter, a robot brought me my dinner. And people are seeing these Roomba chargers in their homes. My daughter has an electric skateboard. It's a lot of all of these devices. The one thing they have in common is they've got packs of batteries in them. And I can tell you that the battery landscape's like the Wild West right now. Thermal management is not something that's covered by a lot of regulation. And there are going to be more fires and more people are going to burn in their beds. And at some point, the regulators are going to wake up and say, we're going to do this. We now need to regulate, make sure there's thermal management. Well, we already have it. We have that technology. It's very important to make our own products safe right now, but I believe there will be a huge expansion of the use of these batteries. And so when I bought this battery company, I did a couple of things with it. First of all, it was an all-paper transaction. I didn't give them any cash, and the paper that I gave them was less than the cash they were looking for. And I explained to them, you're going to make a lot more money if you take my paper than if you force me to give you cash right now. And they will. They'll do a lot better if they just hold on to the stock. But beyond that, I also put some earnouts in there, 2022 and a 2023 earnout, so that they have to hit certain performance metrics in order to receive the money that we want to give them. Well, I can tell you they're hitting those performance metrics. And the chief one is I told them that any batteries that I consume, that we consume internally for our own products, you may not count them in revenue. Okay, your performance metrics are for revenue derived from selling batteries into your existing core business. Robots, medical devices, submersibles, drones. In fact, the most famous drone company of all uses our batteries. I'm not allowed to name them. Electric vehicles, stationary storage. And so they have grown that business, and we're helping them with that. We're investing sales and marketing and all sorts of things that they didn't really used to do very much, and they've grown that. And so now I have to actually pay them their earnout payments, which, by the way, as an acquirer, is the best liability that you can ever be saddled with, right? It's an earnout payment, right? Because what do most companies that make acquisitions do? They spend the next 3 or 4 quarters writing down the goodwill on the thing, right? Because it ends up being worth less than they paid for it. We're going the other direction. This thing's worth more than we paid for it, and we have to put a contingent liability on our books for an earnout payment we're going to have to make in the future. Good. That's what I wanted. That's what I was exactly what I was hoping for. So we defended our supply chain. We improved our gross profit by recapturing that margin that was going out elsewhere. We got all the IP, we got all their customers, because all of the drone operators and the submersible operators and all those guys, they all need charging infrastructure. Okay, so there's a true cross-pollination opportunity here. And then we got all their fantastic engineers and scientists to help make our products and theirs better. That was a beautiful deal, and all of that with no cash, by the way. And again, so when I say no cash, you're like, okay, great, so you used your equity. Yes, I did. I used my equity, and I'm proud of it. I used your equity. I used everybody's equity, right? Because we're all in this together, and I'm proud of it. And the reason I can tell you that is because if you look at where I am right now, 8 million shares in the float, 10 million outstanding, 12 million fully diluted, I am 1/10. I'm 10 times less diluted than any of my so-called peers out in the marketplace. Even after I made that acquisition, I'm 10 times less diluted than most of my peers in the market, because I'm a post-World War II Scotsman. And if we were taught anything when we were growing up, it's that you are careful with money. We used to cut the toothpaste tube open and smear the inside to get the last of the toothpaste out of it, because if we didn't, we'd get scalped around the ear by our parents, right? I still have that discipline where cash is concerned and where equity is concerned. That's why I'm in the position I'm in today. Even after that acquisition, I have this fantastically low float, fantastically small number of shares out there. And in the end of the day, Tim, you know better than anybody, this is an earnings per share game, right? At the end, EPS. I have far fewer S out to divide my E into than anybody else does out there. And if you believe in long-term fundamental growth, that's the only thing you should care about. And I believe in long-term fundamental growth.
And I believe that you do believe in that. And I can tell you that anything under 100 million shares is what I would consider a thin stock or small float, right? I would consider that anything under 100 million to me is a low float, low shares outstanding stock. So when you talk about 12 million shares, it might sound like a lot to some retail investors. 12 million shares is nothing, right?
It's a tenth.
You could have a hedge fund that could take 12 million shares in a heartbeat, right? I mean,
that's right.
That's nothing. You
And
got
that's
a $10
fully
billion
diluted.
fund, and they want to take a 5% position. Do the math on a $10 billion fund, and what's 5%? Do 5 $10 billion funds, and they all want 5%. There's only one way they're getting them, and that's if they're paying it up, right? I mean, that's how it's going to have to work. And when you have a small float like that, that's why you can see a stock go from, I don't know, $6 up to 75.
Without a doubt. I've said it before, and I'll say it again. I believe we will see new highs. And the next time we see new highs, it will be based on fundamentals. There's something else to put alongside that very low float that I have, by the way. Very high short interest. Yeah, I've got about 22% short interest, more than 20 days to cover on the stock at the moment, with very little supply in the market and nothing but execution on our side. So let's just think about that for a second. What's the short thesis on my stock? I am not going to go bankrupt. I am not going to do a highly destructive and dilutive financing, and I'm not going to fail to execute. For God's sakes, I just announced more sales in the last 8 weeks than in our entire existence, right? There is no short thesis on our stock right now. If you're shorting our stock, it's either because you don't know what we're doing, or because you have some kind of nefarious intent, or because you're shorting the sector. Basically, nobody that understands BEEM is shorting our stock right now. And I can tell you, somebody said to me the other day, "You're like a meme stock. You're going to trade like a meme stock." And I said, "Well, I don't agree that I'm like a meme stock, because I have fundamentals behind me. But I might trade. I might have a short squeeze. I might trade like that, because the only way for a shorter to get out of our stock is to buy. And when you have a low flow, that means low supply. That means the price has to go up." Right.
So I have to tell you, I am a little shocked at how high the short interest is, because
there's certainly no thesis behind it.
It doesn't make sense to me. I mean, I go off of risk reward, right? And that's how I look at everything. So I look at this and say, okay, what's the risk of being short a stock that has gone to $75 in the past, in a very different time, very different company. Right. I mean, if you look at the road that you've paved to get to here today, the GSA contracts, the outdoor advertising, all these things that these were long-term plays. They weren't short-term plays, but now they're done. Right.
Mm-hmm.
I mean, they can, any federal agency can order right off of catalog. You don't have to go jump through hoops. It's done, right?
We don't just have GSA, we have a BPA, a blanket purchase authority agreement in place.
Right.
Yeah, it is the gold standard. And here's by the way, while we're on that subject, so yes, we have made some very large federal sales in the last short period. But just yesterday morning, I announced a $5.3 million deal with the city of New York. It's the 7th purchase order that we've received from the city of New York and the largest. Here's what's interesting about that. I previously had a contract directly with the city of New York, and they have a lifespan. At the end of that lifespan, they have to go out and competitively re-award those, okay? Which is, we would have won it because no one else makes what we have and we have good patents on it. But it's still a complicated process. If you read that press release yesterday morning, you will notice that the city of New York used the federal GSA contract to buy our products. Now, how can they do that? It's a federal contracting mechanism. Well, the reason is because unusually, our federal contract is available to all American government entities if they have a disaster preparedness requirement, right? It's the federal government making sure that we are secure in our energy and in our transportation infrastructure in the future, making a contract available to people that have that. Well, my products continue to charge vital fleet vehicles during a blackout or a brownout, disaster preparedness. My products have an emergency power panel, which will continue to provide electricity during those types of events, disaster preparedness. My products are windproof to 100, are rated for 150 miles per hour, but have survived 185 mile an hour Category 5 winds. Disaster preparedness. My products are flood-proof to 9.5 feet. Disaster preparedness. As a result of that, any governmental agency in this country who doesn't have the time or the willingness or the energy to put together a competitive process can still buy our products by buying directly off the GSA contract if they have a disaster preparedness requirement, which everyone does who's putting EV charging in. The nice thing for them about that is additionally they get the little discount that we give to the federal government as a part of that. So it's difficult sometimes to get some government entities to buy your product because they have to go through this big competitive process. That's a lot of work for them, often costs a lot of money and takes a really long time. Now our salespeople can say to them, you don't need to do that. Just go to the federal contracting mechanism, use GSA, and because it's a disaster preparedness solution, unlike just any other EV charger, then you can use that contract. It's a fantastic benefit for us. And you'll see, again, New York City, we just announced yesterday on that contract, but if you go back through our press releases, you'll see quite a few non-federal government entities who are using the GSA contract to purchase. It's brilliant. Oh, and then during the same period of time, the state of California renewed our contract with us. They added more of our products to it, so they broadened the scope, which is great. We love it. And at the same time, they made it available to any other state in the union that wants to use their contract. So between the California and the federal GSA contract, we basically got all government across the United States covered with 2 contract vehicles, which will allow, whether it's a city, a county, a state, or whatever type of entity it is, to buy our products without having to go through a competitive process.
So what's funny about this what we're talking about right now, it's not funny actually, but it was when the gas pipeline had gotten taken for ransom, and I was sitting here thinking about, Jesus, I mean, God forbid it ever happened, but somebody takes over our grid, that would be a big problem, right? And then I reached out to you and I said, hey, Desmond, I'm thinking, couldn't you be considered a homeland security play because of the fact that you're not tied to the grid and you still provide power for emergency responders and cell phones and whatever else? Wouldn't it make sense that every federal agency across the entire country would have, like, I don't know, 10 of these things? And right? I mean,
it's starting to happen, and actually you're absolutely right. On Monday,
what you told me was, you're right on point. I just wrote an article about it. And then you sent me the article. And I was like, Jesus, Desmond's not just right on point. He's like 35 steps ahead of me. I mean, he's like way out there. But the statistics that were in that report, in that article, were frightening. I mean, they were really, really frightening.
Yeah.
And
they're accurate.
And it's scary. Right. And you think about, and that's why, when you say this is the tip of the iceberg, I'm in 100% agreement with you. Right.
Yep.
because the opportunity is immense. The politicians are saying we're going to 2035. I honestly don't see it because I just don't think we have the infrastructure to do it. And I also don't think we're going to have the materials. I think we got a lot of big problems ahead of us. 85% of the materials that are used to make batteries come from China. It takes, I just read this stat the other day, it takes 17 years on average to get a mine up and running in the United States.
Yeah.
17 years.
Yeah.
I mean, I don't know what everybody's thinking, but you would think that we would have learned from oil and gas that we don't want to be dependent on a foreign entity for our energy needs. Yeah. Right. And what are we doing? We're going to a situation where, there's an entity that really doesn't like us very much, that is 85% of the global supply. That frightens me.
So let me just make a couple of comments on that.
Yeah.
Because you're right. On your Department of Homeland Security comment earlier, you're absolutely right. And I think we announced just earlier this week, I don't know if it was this week or last week, a sale to the Department of Homeland Security for just that reason, right? So they're millions of dollars. So they're figuring it out, okay? But let's talk about supply. You are right. It's not so much that 85% of the stuff for batteries comes from China, but 85% of the refining does. There's no doubt about that. But let's talk about that for a second. At the moment, lithium, for example, one of the most common elements on the planet. In fact, I think after the universe was formed, hydrogen, helium, and lithium were about the three first things that were formed right after the Big Bang. Okay, there's lots and lots of lithium in the United States, lots of it. In fact, just near where I am, there's a thing called the Lithium Project, at the Salton Sea. Stacks and stacks of lithium all over the place. The United States has the fourth largest reserves of cobalt in the world. We do not need to be going to Congo and sending children down holes to pull cobalt out of the ground to make batteries. Nickel, manganese, the other two things that are really important for the types of batteries that we use, widely available within the Western friendly democracies. Okay, so then your next point was, but it takes 17 years to get a mining permit and everything in place, and you're right that process is woefully slow, and we have not made the investment in the refining infrastructure that's required to do that. But I'm going to tell you something. If I believe in one thing, and I think it's the greatest strength that the United States has, it is that supply and demand here rule. Okay, supply always. I mean, to use a ridiculous example, I don't take drugs, but I'm in New York City right now, and I can tell you that in half an hour I could get my hands on some cocaine if I wanted to. Right? It's illegal, right? And you go to prison for having. But why is it available? Because the demand is here, right? As long as demand is here, supply will follow. And what I'm going to tell you is this: there's going to be a massive increase in demand for all of these things that we're talking about right now. And I think that you will see increased activity on the part of the government to discourage, and you can see it in IRA, the Inflation Reduction Act, to discourage getting that stuff from China, and also to encourage the local production, or at least production from Western democracies, friendly Western democracies. And I'm very, very confident that in the next couple of decades, our dependence on China for these components will disappear. We may still buy it from them, but our dependence will disappear. And then there's another thing that's very important to understand about this, as far as your point about us not making it in 2035. We're going to make it in 2035, and here's why. Europe has passed a law banning the sale of internal combustion engine vehicles in 2035. US auto manufacturers cannot make internal combustion engine vehicles for North America and electric vehicles for Europe, not profitably. Maybe 50 years ago, but not now. And this is why you see Mary Barra of GM, and this is why you see Ford and Stellantis and all those, the big three, and all the others committing to all electric fleets by 2035. It's not because they're tree huggers. It's not because they're worried about any of those things. It's because they know that they cannot exist if they're still trying to make internal combustion engine vehicles in that era. Now, I believe history tells us something here. If you look at what happened in 2008, when during the crash, the auto industry was at risk, and both everybody but Ford had to get bailed out by the federal government, basically. Why did the federal government bail them out? Because the US cannot contemplate a future without an automotive industry, and it should not. The US was the undisputed leader of car manufacturing up until the 60s and 70s, gave it over to the Europeans and to the Asians. Now we're the leaders again with electric vehicles. This is a new era of Tesla, Rivian, look, all the best electric vehicles are coming out of the United States because electric vehicle manufacturing lends itself to the fantastically efficient capital markets we have here and to the innovation culture that we have here, much better than it does to command and control type environments, okay? So you're going to see a lot of electric vehicles being made here. They're going to have to be, happen in a very, very quick way by 2035. And I think the automotives go to the federal government and say, hey, listen, if we don't have charging infrastructure, we don't have these materials, we don't have electric vehicles. And if we don't have electric vehicles, we don't exist. And I think you're going to see a shitload of activity in the next 15, 20 years, making sure that these supply chains do not fail. And we're going to benefit from that. And we're going to contribute to it as well, which is the best way, right? So don't fear. It's going to happen. And we will solve the Chinese piece of that pie. We're already don't buy battery cells from China. We buy them from Korea, South Korea, an ally. And as I said, everything that we need to make batteries is available from within our own nation and from the Western friendly democracies. And then there's one final thing I want to say to you. Lithium-ion batteries are about 98% recyclable today. There will be advances. We'll get closer to 100% recyclable. Some great companies already doing this today. Spears Technologies, Li-Cycle, and many others doing this today, about 98% recyclable today. Now, there's going to be an increase in the number of vehicles on the road for about the next decade. And then I think you're going to see that plateau. And the reason for that is because you're going to see more sharing and you're going to see an increased number of autonomous vehicles on the road that people won't need to own so many. More miles will be driven, more bums in seats, basically, for more miles, because vehicles will become more convenient as you don't need to park them and you don't need to own them and stuff like that. But there will be less vehicles and there will require less batteries. And so here's a very interesting thing for you to chart in a mental thought process. We're going to need an increase in the number of batteries till we get to the point where we have saturation with electric vehicles. And then we're going to need less as there are less vehicles on the road with sharing and automation and all that sort of stuff. And if you have a 98% recycled battery and you need less vehicles in the future, then you can quickly grasp how actually at some point the extractive technologies, mining, etc., become obsolete. And actually all you need to do is recycle the 98, which will be 99% by then because the technology will improve. You just need to recycle them and you have a circular economy where transportation is concerned. You don't need extraction anymore. No more oil, no more shaking hands with the devil in the Middle East or anything else like that. No more shaking hands with the devil in Asia to get more extracted batteries and all that. Just a lot of recycling of the same stuff. What I'm describing to you, by the way, is not fantasy. It's not fiction. It's science and physics. And science and physics, I'm afraid to tell some people who don't believe in it, actually doesn't lie. It some people's interpretation of it does, but it itself doesn't lie.
You got this all figured out, don't you, Desmond? I mean, what the hell? I mean, you got all the solutions. I mean, what? I don't know what the hell I was thinking. I'm not worried anymore. All of a sudden, I feel.
Listen, I want you to worry. I want you to worry because the truth of the matter is that the missing ingredient here is human activity, right? All of these things are possible. It will require leadership. It will require courage and leadership, and it will require human beings, people like you and me, to do the right thing and to demand.
It's my belief that we spend too much time right now keeping everybody dumb and divided. Okay.
Of course.
And I think
I don't know if you read my Veterans Day, and I put out a Veterans Day message every year, and if you read the one that I put out this year, you'll see what I think about that. I'll just tell you briefly. I'm an immigrant to the United States. The United States is a great nation. I am very grateful to be here. I am very grateful to contribute to it. I'm very grateful to hire veterans. I'm very grateful to play a role in this piece, my tiny role in it. And frankly, for anybody to say that this place is not great and needs to be made great again, or for anybody to say that this place is a disaster and falling to pieces and to hate their neighbors and to suggest that we have internal enemies and all that, is a bloody insult to the country and an insult to the people in uniform who have risked their lives to make us be able to live in
their lives
magnificent place.
And those that give their lives.
Yeah.
Right?
So the division thing, it sells. Look, what I said in the thing is our televisions scream vitriol at us 24 hours a day to sell advertising. And so do the televisions in our pockets do that to sell advertising. It's not because this thing is really falling to pieces, because they're selling advertising, right? If we all work and we all contribute, this is a magnificent place. It is the shining light on the hill.
Value on people's lives, right? I mean, there's just a lot of stuff that's happening that I see lately that is just like mind-boggling. I mean, one of the things that blows my mind is, and I just try to understand, with all this technology at our fingertips and all this stuff. I mean, I didn't have this stuff when I was growing up. I had to read books, right? And I wasn't exactly really fond of reading, biology and stuff like that. It just didn't pique my interest. So you look at you want to look up as biology, and augmented reality, and you could actually see somebody's chest cavity open up. I'm like, holy shit, if this stuff was around, maybe I would have wound up being a doctor. I don't know, because it just would have been fun to learn. And then I look at what's happening in society, and it's like we're getting dumber as opposed to getting smarter. And I don't understand. I mean, how do we have a polio breakout in New York? A disease that was eradicated, right? I mean, how does that happen? Because we got dumb by conspiracy theories and all this other stuff, right? Social media is I think one of the worst things that ever happened, because it's where you get a bunch of inaccurate information, right?
You know what, when I was growing up in Scotland, my father always used to say to me, beware of fire. It's a fantastic slave and a terrible master. Fire. And the truth is, social media is the same thing. Fantastic slave, terrible master. So is public television, right? With all that, it's a fantastic slave. And once it gets control of you, and you got it screaming at you all day long, telling you how terrible things are, you start to believe that stuff. But really, you got to ask yourself, think about your own life. How much affected are you by any of these terrible things? I don't own a television set, and as a result, I don't know what I'm supposed to be terrified of. All I know is I go to work every day, and this is a great country with wonderful people in it. Wonderful, generous people. And there's lots of them I don't agree with, and that's okay. They're still wonderful, generous people.
Right.
But
it's okay to disagree with somebody, have a different opinion. It doesn't mean you have to hate them.
It's okay. That's okay.
Right.
We're all on the same side. They're not our enemy. And that's why I have a lot of friends in the military. As you know, I spent a lot of time in the Middle East. We have a lot of veterans that work for us, and I just tell them all the time, thank you for fighting the real enemies and for defending us against the real enemies. And I'm sorry that we sometimes forget not just to thank you for your service, but also for this magnificent place that you've made available to us and that you defended for us. But thank you for it.
I got to tell you that whole thing that you laid out for me actually does make sense, right? Even the peak, I mean, all of it, the recyclable, that all does make sense to me. I mean, whether we can do it by 2035, I'm probably still going to, I don't think I'm going to agree with you unless the politicians can can come together.
It's going to require some courage and leadership.
Right. I mean, it's going to require leadership. And I don't know that we have that leadership right now. Maybe we will. But
there's another force at work, Tim. There's another force at work, and it's the mightiest force in the United States, and it's called the consumer. The mighty U.S. consumer gets what it wants, and it's very impatient, right? And when I'm going to tell you just a brief anecdote here, which will illustrate what you're talking about. I own a Rivian electric pickup truck. I have a 17-year-old son. My 17-year-old son is not allowed to drive the Rivian unless he's got an adult in the vehicle with him, right? And that's because the Rivian, the story I'm about to tell you will illustrate that, right? I live in a pretty affluent neighborhood. There's lots of Lamborghinis and Ferraris and stuff like that there. My son pulls up to the lights with my wife, his mother, sitting next to him in the passenger seat, and alongside him pulls a McLaren. You're familiar with the McLaren?
Yeah, oh yes, right? Sir.
Yes. My son winds the window down and he says to the McLaren driver, "Is that thing fast?" And the guy in the McLaren says, "Yes, it's very fast." And my son says, "Let's see how you do when the lights turn green." And so the guy says, "You're on." And so then my son hits sport. He's in a pickup truck, mark you. He hits sport, and the truck lowers down to get in its hunkered down. Now, I used to play rugby, and I can tell you, when you see somebody doing that and they're coming at you, you're in trouble, right? So the truck lowers down. It's in the sport condition. The light turns green, and off my son goes, and he hears behind him all the noise of the McLaren. Right. And then the McLaren pulls up, catches up to him and pulls up alongside him at the next light. And the driver of the McLaren, to his great credit, looked at my son and said, "But not as fast as you." Now, I tell you that story because I want you to ask yourself, how likely is it that the mighty US consumer will go down to the dealership and select gasoline and diesel vehicles in the future when they know that they can drive a pickup truck that does 0 to 60 faster than a McLaren, right? They're not going to do it. It's not the way consumers behave. Consumers love gadgets. They will impoverish themselves to get into it. So they'll demand the vehicles. And then if the infrastructure is not in place to support those vehicles, they're going to get really mad. And they're going to vote for the people who will put the infrastructure in place. They're going to call Ford and GM, Stellantis. They're going to say, where the hell is the damn infrastructure? And those people are going to call the government and say, you better get that infrastructure in. We need mining. We need batteries. We need all the other things. Stop screwing around because the US consumer's mad. And there's no more powerful force in the world.
Let me ask you a question. How much was the Rivian?
Well, I bought mine 3 years ago.
Okay.
And here's what I'm going to tell you. I paid for it 3 years ago. It was worth the wait. It's a magnificent piece of kit.
I got you.
I paid less than you pay now if you go and get one because of that, right? Fair enough. It was worth the wait and it's worth the money. But there are lots of other less expensive electric vehicles that you can get out there.
What's the lowest priced electric vehicle that you can think of?
Oh, well, I mean, now they're getting down in the 20s.
Besides the scooter or the skateboard.
No, they're getting down in the 20s now. And I'll tell you this. I mean, if you look at a car like the Chevrolet Bolt, for example, that's a fantastic car. Equivalent, comparably equipped gasoline vehicles, not different in price. But here's the thing. The average American spends something like $5,000 a year on gasoline and maintenance for their internal combustion engine vehicle. You own an electric vehicle, you don't have that anymore. So even if your Bolt costs $5,000 more than a comparably equipped internal combustion engine vehicle, by the end of year 1, you're at break even. Year 2, you're $5,000 better off. Year 3, you're $5,000 better off again, and so on. You're $10,000 better off, and so on and so forth. I'm telling you that even today, electric vehicles, if you look at total cost of ownership, which I know consumers are not very good at doing that, but they're always looking at sticker, right? But if you look at total cost of ownership, comparably equipped electric vehicles are already about the same price and getting cheaper all the time. And they're only going to get cheaper in the next couple of years. They will be far and way ahead of it, especially at $7 gas.
What is the life cycle? All right. So here's the one thing that I've been curious about. What is the resale value of a electric vehicle set 5-6 years down the road when your batteries are no longer holding the charge? Would you say the batteries are probably the costliest thing in the car, right?
Yes, they are.
So if you've got to replace the whole battery system, what does that run?
And the truth is, you don't have to replace it. I mean, the fact is, most of these batteries now are going out with very long battery warranties associated. I've been driving electric vehicles myself for the last 12 years. I've never had any appreciable degradation in the performance of them while I've owned them. Now, I do tend to cycle them every 2-3 years. Because I'm in the industry, I'm always trying something new, and I'm evangelizing. There's no, you remember, I don't just drink my Kool-Aid. I bathe in it, I inject it, and everything else. I believe in this stuff very much, and I consume the things that I'm talking about. I live the life that I'm recommending. I can tell you that there's going to be a fantastic market for second-hand electric vehicles right now, because at the moment, because the EV manufacturers have tended to focus on higher quality, more expensive vehicles, and partly to absorb that cost of batteries, which were expensive before. They haven't been available to people who wanted to buy very inexpensive, particularly second-hand vehicles. Now there's a lot of them coming on the market, and people are getting very good service from second-hand electric vehicles. I don't know of anyone who's had to replace the battery pack in their electric vehicle, except the Bolt owners who did it, and that wasn't because they weren't working anymore. It was because there were recognized failures in some of the batteries, and so General Motors did a recall.
They had the factory recall. They had the park away from everybody else, right? Because they might catch fire.
Yeah, exactly. So I think, again, remember what we're comparing against here. We were comparing against that internal combustion engine vehicle car. Even if you had to replace the battery pack after 7 or 10 years or something like that, that would still be much less expensive than doing all the maintenance and everything that you've had to do over your. I mean, there is no, maintenance on an electric vehicle is fill up the washer fluid thing and make sure the tires are properly inflated. You don't even have to change the brakes. Because you don't brake, you just do regenerative, right? I own a lot of different electric vehicles. I always set the regen up to the max. I can basically one pedal drive, because when I take my foot off the gas, all of that energy goes into regenerating and recharging the batteries. I rarely ever brake. I've never had to replace brakes on an electric vehicle.
All right, let me take this back to you guys.
Thank you.
I could say one of the other concerns possibly. would be growth consumes capital, right? And I mean, maybe especially in this environment, right? This is not a good environment. If you are a company that needs to do a capital raise, you're not sleeping well, right?
Yeah.
Especially if you're a smaller company, right?
Yeah.
And maybe that's a concern. I mean, because your burn did go up, right? A little
Well,
bit.
we need to be very careful when we talk about burn, what we mean by burn. Okay.
All right.
Okay. Let's just talk through cash usage here over the last year. And I'm really glad you brought this up because it's very misunderstood. People look at my third quarter and say, he burned through $6 million worth of cash. No, I didn't. No, I did not. What you will see is a judicious leveraging of my balance sheet to secure us and defend us against future disruption. So I have increased inventory, I have increased prepayments to vendors, and I have increased WIP product, work in progress product right now, to an extent that I have never done it before. Why did I do that? Because there were supply chain bottlenecks that I wanted to make sure that we were defended against. It was absolutely the right thing to do. I will convert all of that inventory, WIP, and prepayments in 180 days, materially. So basically what I did is I took cash off my balance sheet, put it into inventory, prepayments, and WIP that will come back onto my balance sheet. And this is easily derived if you just spend more than just a second looking at the balance sheet, right? And I know a lot of people don't do that, right? A lot of people, cash line, right? Here's where it was last quarter, here's where it is today. He's burning cash. No, I'm not. What you need to look at is you're going to take cash and add in inventory, WIP, and prepayments. It's all on the balance sheet for you easily to see, right? And what you're going to find out is that I went from about 24 million in cash at December 31st, 21 to about 17 million in cash and equivalents today, right? That's $7 million over 3 quarters. It's actually a little bit less than that. In fact, let me take that back. It's less than that. We're about $2 million a quarter. Is where we are. One of the other things that's going to be confusing for people when they look at this is that they're going to see this thing called a contingent consideration in there for just under $5 million, which is impacting my working capital. This is the thing I described to you earlier. This is not debt and it's not cash. It's actually the fact that I'm required to show that in April of next year, I will be making an earnout payment for the battery company that I bought because it's worth more. It will be all shares. And as I said earlier, it's the best payment I could ever make because what we bought is worth more than we originally valued at it and given it. But it shows up as a contingent consideration on my balance sheet. It affects my current assets. Looks like cash if you don't understand it. And then the other place it shows up really unhelpfully, talk about no good deed goes unpunished, is it shows up in my P&L. People are like, you lost $6 million. No, I didn't. Take out the contingent consideration. That's what my actual net loss was. That's what you could call burn. So let me add all of this up for you. Clearly, over the last 3 quarters, I've burned about $2 million a quarter, not used, burned, right? About $2 million a quarter. I clearly, again, it's all there, have about 17 million or a little over 17 million in cash, and stuff that's so like cash, it might as well be cash because I'm going to convert it. If you divide 17 by 2, that will give you the number of quarters that we could go on for without having to do any type of a raise at all. If nothing else changed, right? If nothing else changed, then and by the way, during that period, I acquired a company and integrated it, right? Which is expensive. You get legal fees on, although I did not pay the bankers anything because I did that transaction without anybody. I did it on my own, and that means I didn't have to pay any fees. And yes, I am proud of that and happy about that. So bankers don't like me for it, but hell, they're making plenty of money. There's a lot of tall buildings in New York City. I'm not worried about that. Okay, so do that. And then there's another thing that you need to think about. I currently have the highest contracted backlog and purchase orders that I've ever had in my history, by far. I did $9 million in revenue in 2021. I did $14.1 million in revenue in the first 3 quarters of 2022, not full year. So just see how that's going. And then consider that today I have just under $63 million of contracted non-recourse purchase orders, which have to be executed on in the next 12 months, not full year 23, basically by the end of the 3rd quarter 23. Now, The more volume I do, the more stuff I run through the books, the better my gross profitability is. Therefore, the reduction my requirement for burn is. So actually, if we even using that 2 million a quarter, if everything stayed the same, if we stayed with our same spending profile, but just executed on this the backlog that we have, you should anticipate an improvement in gross profitability, therefore more contribution to the bottom line, therefore less burn. But let's not do that. Let's just take the 2 million and divide that into 17, and that tells you how long we could go on if we
without having to do any kind of capital.
And that's quarters. By the way, that's quarters, right? That's over 2 years of cash on hand if I need to move forward. Now, we're growing rapidly. People say to me, well, you're going to need to raise capital. I'm going to say, no, I don't need to raise capital. I might want to. I'm telling my wife and kids all the time, there's a big difference between need and want. Okay, right? Especially where capital is concerned, when you need it, it's expensive and hard to get. When you want it, it's cheap and readily available, right? If it's for growth and for things like that, right? So would I raise capital? Yes, if I can do it in a way which is not destructively dilutive. Of any raise is going to be dilutive to some extent. But again, I've showed over the last 10 years tremendous discipline where that's concerned. That's why I only have 8 million shares in the float, 12 million fully diluted. We talked about that earlier. I'm not going to suddenly give up on that discipline, right? But if I need to raise capital and I can get it inexpensively and it's the right thing to do for my shareholders, I'll do that. I have several guiding principles, and I'm about to share one with you. I never do anything to enrich bankers and future shareholders at the expense of my current shareholders. Never.
And you know what? That is such a huge thing that you just brought up, because this is where you're a very unique individual, because for a small company, a lot of these guys, they're not familiar with the capital worlds. And they think that these finance institutions are their friends, or their partners, right? And everybody and their brother wants to raise money for them, and everybody and their brother wants to take them to the next, to the NASDAQ or whatever. But at the end of the day, they find out that these guys really aren't their friends, and can actually do a real good hurting on a stock. And unfortunately, some guys just aren't aware of the capital markets that and how they function. And I'm not saying that every financing firm is like that, but there are a lot of them that are. And then,
look, it goes back to what my father said about fire. Terrible master, fantastic slave. It's the same. The capital markets are magnificent, right? The bankers are magnificent. Look at what they enable. It's fantastic. Right. The wealth creation, the innovation. Again, this is what's so great about America. None of this would happen were it not for all these bankers in the capital markets. But you need to understand what their motivation is, right? They are driven by making money. That's a good thing. If you understand that, and if you set the boundaries and the limitations and the understanding early on in the process, and if they know that you're not someone who they can just squeeze and tap and bounce around like a ball in a pinball machine, then you get very good service, and it's really a fantastic deal. I have great relationships with my bankers because I set the parameters of what that's going to look like early on, and they either accept that we're going to do this in a way that's in the best interest of our current shareholders, or we just don't do business together. It's as simple as that. And what I see is most of the people who I meet who bitch about Wall Street and bitch about the banks and all. By the way, same thing with attorneys, right? Attorneys are great too. The law is the fabric that holds society together, and attorneys are an important part of it. But if you let them run wild and just take and do all that, they're going to do that. They're clever people, right? But if you use them as the tool that they are, the right tool for the right job, and you manage them properly, they won't hurt you, they'll help you. I mean, look, a hammer is a very dangerous thing, right? Used inappropriately, it's a very dangerous thing. It's also a magnificent tool. Use it appropriately and control it, and you will get brilliant service out of it. Lose control of it, use it inappropriately, you're going to get hurt. And that's the way I look at the Wall Street.
The point I wanted to make is that the consideration that you have, what you said, the statement that you just made was, I'm not going to favor bankers and future shareholders to the people that helped you bootstrap from the beginning. Nope. Right? Where a financial institution doesn't have that alliance.
No, that's correct.
Right?
It's my job to defend my existing shareholders.
It is your job. It is, and I think a lot of CEOs fail at that job. They fail to recognize that a lot of these companies were started from, friends and family, right? That's how it got started. And
Yep.
those are the people that suffer when you do the really dilutive financing deals, right?
Yep.
The guys that were the believers way before anybody else. And that's a pretty shitty thing to have to go through, right? So, I mean, you're very, you're a sharp guy. I mean, you really are a sharp guy. It's a Scottish.
Thank you, Tim.
Yeah, I mean, you're running the. One thing I want to make real clear to everybody is that you haven't ever said anything that hasn't become reality. It's just taken longer than
Sometimes
anybody anticipated. And
sometimes
that happens. That happens. I've been doing this long enough in the markets, even with the stock itself. You think, wow, all right, things are really starting to happen. And even then, it takes the street to really grasp. It takes them longer to grasp it that it is happening, that it is finally coming to fruition. So everything takes longer. And you just have to be a patient. Warren Buffett, I think, was the, stock market is the opportunity to transfer wealth from the impatient to the patient. And I fully believe that, right? If you understand the company and you intimately know what's going on, and you know that fundamentally they're good, and the total addressable market is massive, and it is, in this case, massive, right? You start putting those pieces together, you look at your competition. I don't know of anybody else that makes what you make.
Nor do I.
So, I mean, as I put all these pieces together, I'm not scared when it goes down to $9. I don't care. I want it to go to $4 because I know, and I don't know when. I can't tell you exactly when, but I know it's going back up, right? There's nothing that has fundamentally changed. And the need, it's funny that you use that term, want and need, because this is one of those. How do I define what I consider to be a good investment opportunity? There's a difference between a want and a need.
Yep.
And this is a need.
Yes, it is.
Clearly, right?
Yes, it is.
So it's okay to want something. It doesn't mean you have to buy it because you want it. This is a need. And and if that need, as we get closer and closer to 2035, is only going to get stronger.
Without a doubt.
In my view, right? So what does that mean?
As I tell my people all the time, for a long time we were vitamin, now we're aspirin. And I want to be aspirin, not vitamin.
Let me ask you this. In terms of being able to handle the capacity for growth, I mean, if you got an order tomorrow for 150 of these things, right? How are you positioned to be able to handle that type of growth?
Well, we just announced an order this morning for 367 of them. And the day before that, an order for another 71, and the day before that for
all right. So okay, I'll go bigger. If you get an order for 1,000 of them or 1,500,
so here's the answer. I have capacity in my factory to get to 4,000 units a year in my factory, and that, by the way, I've been punished for that too. You could say that was a risky thing to do because I've been paying for that factory with all that capacity while I was only producing a small number of units. And that's two impacts. First of all, it's expensive just from a cash point of view. Secondly, it negatively impacts your gross profit because GAAP requires you to burden each of the products that you sell with its share of the fixed overhead allocations. And if I sell one EV ARC like this thing behind me here, then it has to carry all the overhead costs, the direct overhead costs associated with the factory and everything else. If I sell 100, each one carries 1%, 1,000, each one carries 0.1%, so on and so forth. So carrying this factory that's been able to produce 4,000 units, that's been a bit of a burden for us. Having said that, why did I do it? Against courage and leadership, which is so thin on the ground nowadays. It's like, you got to believe in what you're doing. I believe the big orders were coming, and as I just pointed out to you, 367 this morning, 71 yesterday, and so on. The big orders are definitely coming right now. We've got just under 700 units in contracted backlog right now. But luckily, I got a factory that can make 4,000, and I'm going to need it. because the simple fact of the matter is, these orders that we've received, these, like the one this morning, 367 units for the US Army, that will also won't scratch the tip of their iceberg of their demand. All right, we're going to get, I believe, 4-digit and more orders from them as we continue to execute for them. So here's another way of looking at this. I can expand a great deal in the existing factory that I have. I'm probably going to have to open 6 to 10 more of these in the United States. As you know, I've just spent a month in Europe in the Levant. I intend to expand into Europe. Our products will be more popular there than they are here. And at the end of this month, I go back to Europe and then down to the Middle East. And I intend to expand into those markets as well. So I think you should anticipate in the future that we will open more factories, and that we will open them not just in the United States, but also in Europe and in the Middle East. I'm pretty good at putting those things together and doing it in a way that really leverages the hell out of what we have, mostly our intellectual property. But at the moment, I've got plenty of room for it to expand. I'm still only running 1 shift 5 days a week. I can go to 2 shifts and then 3, and I can go to 7 days a week if I want. And I can add automation into our processes, and you will see me do that.
I was going to ask
will be
you
more
about
investment, but it'll be judicious.
So automation is still also something that you bring into the fold, right?
Sure.
At some point.
Sure. Yeah, absolutely. And I'll tell you what's interesting about that. Labor is a pretty small cost contributor to our product. We're mostly BOM. So we're not going to get huge cost savings from automation. It's not about that. It's about increased throughput. The faster we can produce a quality product, the better it is for us. That lowers our costs, just more throughput. And you also get more consistency. Human beings are magnificent, but they're not consistent.
Not
machines,
in a repetitive. I mean, it's just shit's going to happen, right?
Exactly. Yeah. I can tell you something, that when I first started out in business, a robotic welder was over $5 million. Today, you can buy the same thing for less than 300,000.
And look, it makes sense, right? But it's still, you're still going to be a job creator.
Oh yes. Oh yeah. Listen, we won't reduce staff. Even the more we automate, we won't be automating to cut headcount. We'll be automating to absorb a shitload more volume and consistency, because that's, listen, what's one of the things that wrecks companies like ours? Success, right? You do not want to fall victim to success. You do not want to fail to deliver. You have, obviously, rule number 1 is don't run out of money. Rule number 2 is don't fail to deliver to your customers. Okay. I don't intend to do either, but no, we won't be reducing headcount. We'll be hiring people, and loads of them. And the thing I'm most proud of about that, well, actually, there's 2 things. I'm very proud of the fact that we tend to hire people that have what I'll refer to as old world skill sets and put them to work in new technologies skills. That's great. That's longevity. For people. The other thing I'm very proud of is that I still today, and we intend to continue doing this, give equity to any of our employees who've been with us for over 6 months. Yeah. Anybody who's been with us for more than 6 months and merits it, it's a meritocracy. They get equity. That's
no matter what the job is. No.
If you're pushing a broom in our factory and you've been with us for more than 6 months and you merit it, then you will get some equity. And what I tell people, particularly in San Diego, this is where our factory is, not so much in Chicago, where our new battery factory is, but in San Diego, what I tell them is, if you work for us, your paycheck, I hope, will pay your bills. Of course, I hope that. But it will not generate wealth for you. And if you're pushing a broom in San Diego, you don't have a snowball's chance in hell of ever owning a home. Not a snowball's chance in hell. Your equity with us will create wealth. Your paycheck will pay your bills. Your equity with us will create wealth. And nothing will make me happier than to see a broom pushing employee of Beam Global buy a home because of the wealth that was generated by sticking to it and sticking with us. They don't get a lot of equity. It's going to take a while, and they need to hold on to it and everything else like that. But that's okay. That's the American dream. And if Beam Global can contribute to providing the American dream for our employees and our shareholders, and our customers, for that matter, then that, to me, there isn't a better thing we could be doing.
Listen, you nailed it again. These are the things that I admire about you. They're, your employees or anyone's employees. I think a lot of companies fail in that area miserably. Everybody should have a piece, not just the top brass, right? It should be everybody. The guy the guy cleaning the toilets should have a piece if he is committed to the company. Huh?
If they merit it.
Yeah, if they merit
the meritocracy. Yeah.
Yeah. Absolutely, right? But if they're committed to the company and, you know, they love coming and doing what needs to be done for the company every day, they deserve it, right?
Yeah. It's very gratifying.
Yeah.
Very
And then
gratifying.
I can't, like I said, I can't even imagine the feeling you would feel knowing that, yeah, he just went out and bought a house off of the stock that he owned from, you know, the last 10 years or whatever. So,
Yeah.
I mean, it puts everybody on the same page, right? Everybody cares.
Without a doubt. I take some young guy fresh out of the Marine Corps and I give him a job and he's got equity and he can buy a home and all that sort of stuff. Listen, you're damn right. By the way, they just turned the lights off in the building that I'm in. So
I saw that.
Hold on a second. Let's see if I can. There you go. Luckily, I'm a technologist. I figure out how to turn them back on again. I'm actually in one of, speaking of bankers, I'm actually in one of my bankers' offices in New York City right now, overlooking Park Avenue. So I'm in very luxurious surroundings, but I'm not paying for them.
Well, listen, Desmond, is there what are you most excited about? I mean, look, if anybody can't feel your passion right now, I don't know. They must be on another planet, because I can feel it, right? But you've always had a high energy. I mean, it's not like this is unusual. You've been a believer and a passionate believer the whole time, and you've done what you said you were going to do. It has taken, in some instances, it has taken longer, but you haven't destroyed the capital structure of the company. And if anybody cannot see this inflection point and just look down the road as to what is coming, it's just going to get bigger, in my belief, right? I mean, we're talking about a recession. We can talk about a recession as long as you want. Bottom line is, this demand isn't going to go away. It's just going to continue. So you could almost say this is almost a recession-proof play. Right?
I want to talk about recession for a second, and then I do want to tell you what I'm excited about.
Okay.
Let's just talk about the recession for a second. I'm going to tell you this. Nothing in our contracted backlog and nothing in our sales pipeline is at risk from recession. In fact, it's the opposite. It's going the other way right now. Nothing. So top line, I am immune. And I believe we are, if we're not already in a recession, I believe we're heading for one. But let's think about the other side of it, right? Top line, immune and growing not just a little bit. Just look at what the news we've released in the last few days and compare it to what we've done over the last several years, right? We've been growing, and now we're doing this, right? But let's look at the other contributor here. Labor becoming more available and less expensive. We're already seeing it. Commodities and materials becoming more available and less expensive. Transportation becoming more available and less expensive as a result of just coming off this hyperinflationary plateau that we're on right now. We're already starting to see this drop off. Recession will drive that. We've seen a 27% increase in our BOM costs in the last couple of years, driven by inflation, COVID, and everything else like that. At the same time, we improved our gross profitability by 5%, even in the face of a 27% increase. So we absorbed all of that increase in costs and still improved gross profitability by 5% in the same period. Right? You can add those two numbers together. That shows you the impact that we've had through increased efficiencies, getting better at what we're doing, and all that sort of stuff. Recession, I hate to say this, is good for us. Recession will make all of our cost inputs come down, and our top line is not in any, and our availability of labor and everything else like that improve. Our top line and not in any way at risk. Now, to what I'm excited about, that's certainly, I hate to, listen, I hate to take advantage or exploit it, but my job is to exploit every opportunity that comes in the way of BEEM. And if a recession is an opportunity for me, I'm going to exploit it. I won't enjoy it for other people, but I'm going to exploit it. At the same time, by the way, in the public markets, there are not going to be a lot of great opportunities. There's not going to be a lot of shining lights out there. We're going to be one of them. And so I also view that as another benefit for us where our share price is concerned. But if you want to know what I'm excited about, and you're right, I do have a lot of energy for this. I would say I have nearly limitless energy for things I believe in. I'm as close to the irresistible forces you'll ever meet for things that I believe in, and I believe wholeheartedly in this, and I have done, to commit 12 years of my life to it. I could have been earning a lot more money elsewhere. I could have done a lot more mercenary things, and I put my family through that, and I put myself through it. Why? Because I believe in it, and because I think we're going to be fantastically wealthy as a result of it. And it's the same thing with our early shareholders and the people who have come along with us, and I thank them for that. What I'm excited about is that if you look at where we are today, we have We did 9 million in revenue in 2021, 14.1 for the first 3 quarters. I know I've already said this, but I like repeating it. I've got almost $63 million worth of contracted purchase orders to execute on in the first, essentially by the end of the first 3 quarters of 2023. Did we send the sales team home? Did we tell them, okay, you don't need to do anything now because we have 23 in the bank? No, we're increasing investment in sales and marketing, right? So it's like, you've been working on this thing for years and years and years. And it's I don't know if any of you saw the Artemis launch yesterday, the Space launch system, the biggest rocket that NASA's ever launched.
Yep,
That's how I feel. I feel like we've been on this launch pad and there were a few delays. You talk about things taking longer. Artemis was supposed to launch several times over the last couple of years, over the last several months. Weather delays and other things went wrong. Well, they lit that candle yesterday. And by God, it was the biggest flame that mankind's ever produced, the most powerful machine ever, and up to space it went. That's how I feel. I feel like we're there right now. We're blasting off, and I'm strapped in, and I'm fucking thrilled to take the ride. I apologize for my language, but I am thrilled to take the ride.
No, you know what? You have nothing to apologize for. Yeah, I'll tell you right now, if there's any shorts watching this thing right now, I don't know, man. Me personally, I would be covering, but hey, you know, some people just have a different way of thinking. So I mean,
if you're short this stock, I'm coming for you.
Oh, there's no doubt.
That's what I'll say to you about that. Pack a lunch.
There's no doubt in my mind about that. And you know, look, I think this is a feel-good story all the way around. I think it's, like I said, there's a difference between a want and a need. This is a need. The need's only going to get bigger, and you've done all the hard groundwork. It's done. The road is paved, I believe, right? It's just a matter of continuing to get out there, tell the story, and executing it. So far, anybody that says you're not executing, they're not paying attention. Right?
Exactly. That's exactly right.
And if anybody does, where did you post that article, Desmond? The one on the
it's on our website. If you go to our website and you go to news and all that, just scroll through there, you'll find it. I think it's also probably on our LinkedIn pages and stuff like that, but it's definitely on our website. You'll find it. I think I called it the COVID pandemic was a sideshow in comparison to the grid pandemic.
Right. I mean,
words to that effect.
Look, I recommend to everybody to read that, because it will wake you up.
It's illuminating.
It is.
It's a big vulnerability, and we need to fix it.
Yeah.
You do not need to bomb this country into submission. Just turn the power off for a few months, and people can do it without ever coming here. It's alarming.
It is alarming, and
we need to fix it.
You are part of the solution.
Yes, we're a part. I'm not claiming that we're everything.
I didn't say the solution. I said a part. Right.
You're quite right. Yeah.
So I think this is exciting. I think the next few years are going to be a lot of fun. But
oh my God, we've got 2 decades ahead of us that we just hold on as tight as you can.
Desmond, I'd like to say on the next significant, announcement that you have, we'll have you back, but that could happen like next week.
I know. Maybe tomorrow morning. Listen, we've got some other big things I'm working on at the moment, and Tim, I will definitely be in touch with you. And let's not call growth significant anymore. I think we've already passed that hurdle. But when we make some major moves, I will get back in touch with you. And I'm very, very grateful for the opportunity to talk to you. I always enjoy talking to you, and I'm very grateful to your listeners for taking the time to hear my favorite story.
Well, your favorite story should become a lot of people's favorite story. And I just want to go over a couple of things on the chart. Is there anything while I'm looking at the chart that you feel as though maybe I missed, or that you really want to highlight?
No, I think we've covered. I mean, look, let's face it, from an investment thesis point of view, very low float, very low shares outstanding, and very low diluted, with incredible growth at the beginning of what Goldman Sachs is calling a $6 trillion infrastructure build out. And we have unique products, very good patents, and we're not a concept. We're selling to the US Army, to the Marine Corps. I'll tell you one brief anecdote, which would be kind of interesting to you. I was in Europe just a little while ago. I can't go into too much detail about who I was meeting with, but I wasn't alone over there. I was introduced by the US military to another military, and they said, we use their products, we really like them, and you should use their products too. And I can tell you something, if you want to sell somebody in uniform, have somebody else in uniform tell them that the thing is right. It's just, it's everywhere we look, opportunity exists, and we have a good solution to help people within our sphere. And we're going to do that. We're going to make that expansion.
So a couple of key takeaways that I think are worth really highlighting is the battery supplier that now wants to represent the line in Asia, right?
The cell supplier, yes.
The cell supplier wants to rep the line in Asia. That could be a decent sized opportunity, right? You got
Europe's the biggest EV market in the world. We're going there next,
right?
You know, and again, as I said, the Middle East too. So it's not just the United States.
Right, we're talking.
There's a gigantic opportunity here, but this is a global. Our products work anywhere they can see the sky. They don't distinguish. They don't discriminate. They don't care where they are.
Right. So there is a massive, like I said, total addressable market, massive. I mean, I think you have a hard time actually putting a number on it, right?
Agreed.
All right, let's talk about the chart for a second for all the technical guys. So, you know, the long-term trend line is often a very powerful trend because it's happening over a long duration and you've got momentum on that side. When you break a long-term trend line, that is a very powerful break because what it means is potentially you could be at the beginning of a new long-term trend. And when this trend went from basically the end of 2020 till now has been in a downward trend, right? Made a series of lower lows, lower highs, but now that trend has clearly been broken, right? And this is a daily time frame. So it has clearly broken that trend and closed above it. And now you just took out your 200-day moving average, which is another indicator the technical guys love to look at. You've had a big run here in a very short period of time. And it happened on higher volume. I mean, the volume was kind of lower here, right? So that adds credit to the volume that, you know, there's something here. Now, it has had a big move and stocks usually don't go straight up in a straight line. They usually stair step. They stair step, you get a pop, you get a consolidation, and then you get another pop, another consolidation. And that's what you have here. You had a pop, a consolidation, now you had a pop, and I expect maybe you see a consolidation here. Could it come down and test this 200-day moving average? It could, right around 1450 or so. And there also happens to be price support there. So you got two things going on. I'm not telling anybody to buy the stock. I think personally, the stock under 20 bucks is a steal. That's my belief, right? You don't want to buy the stock today. That's fine. But I will recommend this. Go to their website, go to their investor relations, and sign up for their investor email alerts so that you can pay attention to what's happening with this company. Because I have a feeling you're going to see a lot more email alerts or SEC filings. And, you know, as long as nothing significantly fundamentally changes or Desmond doesn't leave and go somewhere else, then I'm
not doing that.
You never know. I mean, you don't say never. I mean, you just never know. But I don't think you are either. I highly recommend putting this on your radar because I will tell you that it went back. You know, I owned the stock for this run. It was a fun run. Did I catch the whole run? I didn't. I'm not going to lie. I didn't catch the whole run because I think it was at like $48 from $6. I said, well, maybe this is getting a little stretched because there still wasn't really a lot of revenue coming in, right? So it turned out, I mean, I left a lot on the table and I regretted it, but there's now this golden opportunity to get back in. And, you know, I think this is just the beginning. And I do believe that you're going to take out that previous high. I think you're going to go test it, and then I think you're going to take it out. That's my belief. That and $5 will get you a good cup of coffee, right? So
I'll tell you another fun exercise, Tim.
Yeah.
I'll tell you another fun exercise. What's a fun exercise is to chart our revenue and to overlay the two charts. And what you will see is a nearly perfect mirror image of that. Okay. When you're an issuer like I am and an operator, which is what I really am, and you look at a chart like that and you say, yeah, long-term reduction in the share price. And at the very same time, what was happening in the company? Getting better and better and better and better. And just, if you just, as I say, chart our revenue next to that chart, what you're going to see is it starts low where the peak was, and it gets higher and higher and higher. And only now that we're seeing this return to upward momentum, is the chart starting to behave like the revenue. All of the decline was going in completely the opposite direction of our revenue. Hey, that's the public markets for you.
And I will say this too. You're doing this when 90% of the other companies out there have gone down 90%.
Yes.
Right?
Yes.
So, and that's when your stock is going to stand out like a sore thumb to every day trader, to every swing trader, to every volume trader, right? Position trader.
We'll be the bright spot in an otherwise.
It's going to wind up on their radar, right?
Yep.
And when you're in a tough market, and I don't think that we're done in some of the megas, and I still think they're overvalued. I think that we could still see more downside. And if your stock is doing the opposite in a very tough market, it's going to stand out like a sore thumb. But there's a reason for that, right? You're executing.
Fundamentally driven.
Fundamentally driven. It's not on smoke, it's reality.
We all need to be honest. That $75 spike was driven by an EV bubble. It wasn't driven so much by fundamentals. I have said we will reach new highs. I'll say two things to you. First of all, no one has ever lost money on BEEM stock unless they sold at the wrong time. And someone said to me the other day, you say that about any company. That's not true at all. Plenty of companies, but it doesn't matter what you do, you're going to lose money with them. No one has ever lost money with us if they sold. And I'll tell you this, I believe the people who bought at 75, if they held, I will make them money. We will see new highs. When we see new highs, it'll be driven by fundamentals, not by bubble. And the thing about that is when you see new highs driven by fundamentals, you do not get the gravity effect that you get from the bubble, right? You don't get the sugar high hangover. Even if their macro market conditions go to the shits and all that sort of stuff, of course you're going to, gravity's a bitch. Everybody's going to get dragged down with it. But you're never going to get dragged down the same way that you do when you're just a sort of empty balloon. And we're not that. We are fundamentally strong. Again, go back to the revenue. You map it next to that, you'll see it continually growing. And then if you look at sales and backlog, just off the charts growth. Our sales and backlog chart, if we were charting that right now, it would look like that period at the beginning of that high spike growth. It's just like that, straight up.
Hockey stick.
Yeah.
Right. I mean, look, like I said, I'm not telling anybody to buy it. That's not what I do. All I do is present facts and opinion. And my opinion is this is a needed product that has a fantastic leader that is doing and executing, doing what he said he was going to do. Right. You have not varied. And I have listened to you and followed you for a long time. So, and I've got a pretty good memory. So
I'm just a boring guy. I tell the same old story over and over again, and then I execute on it. Boring is good.
And you're tenacious and you're going after it. Right. I mean, even the outdoor advertising thing in San Diego, I mean, you're tenacious. I don't even know how else to say it, right? But you get it done eventually. Yep. It may take longer, but it happens. So, a man of his word, transparent. You're more than willing to talk to anybody that, wants to talk. I mean, I don't know how else to say it. I mean, there's some qualities here, the fortitude that not want to hurt the current shareholders for future shareholders or financial institutions. These are all things that you should be listening to and go, man, that's what I want to be part of. Right. So, but I'm not, like I said, I'm not telling anybody to buy it. All I'm doing is pointing out the facts. 1450 would be a great spot on a pullback. If it pulled back to There's a really, really defined area right here at about 1250, 1225. There's a really defined area there. If the markets get weak, you never know what could happen. If it pulls back to that, so the way I would be looking at it, 1450 starter position. If it pulls back to 1225, I'm adding, I'm not selling, right? If it goes to 9, I'm adding, I'm not selling, because eventually all I'm doing is bringing my dollar cost average down, and long term, I'm going to get paid. That's the way I see it. Okay. So that's it. Desmond, we'll have you back. Thank you so much for coming and doing this on short notice. It was awesome. And I can't wait for the next one.
My pleasure. Thanks so much for having me. And again, thank you to everybody else for taking your valuable time to listen to our story. Appreciate it.
Let me shut this off.
All the best.
Hey there, all you stock market junkies. Thanks for tuning in today for yet another CEO follow-up interview. Today we had Beam Global, ticker symbol BEEM. We had CEO Desmond Wheatley. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.